financial services or vet services or things that they're exploring that help bring people in for more than just shopping.
All right. I tell everybody my next gig is I'm going to be a greeter at Walmart. I'm not kidding. Jen Bartashis, thanks so much for joining.
I can't tell if that would be entertaining or weird.
That would be, you would love to walk in this evening. Wouldn't that be great?
I don't know.
At least how people were dressing walking into Walmart.
I'm really trying to absorb what this would look like.
All right, we're going to have more coming up. That was Jen Bartashis giving us the latest on Walmart.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom with this Bloomberg Business Flash. It is a stock rally and a bond sell-off. S&P 500 up for a sixth straight session. Walmart soaring to a record after raising its sales guidance. Cisco, Ulta Beauty, they're the best performing stocks right now in the S&P 500. Cisco's earnings better than analysts feared, and Ulta Beauty getting a surge after Warren Buffett disclosed he was investing. Walmart, again, the most active right now, world's biggest retailer, delivering a great quarter. U.S. retail sales on the economic front accelerating in July by the most since early 2023. S&P 500 right now 59 points higher, 1% pop there, 55.14 on the index. The Dow Jones Industrial Average up 349 points. The NASDAQ 100, 340 points higher. That is up 1.8%. The two-year yield up almost 12 basis points. We're above 4%, 4.07%. And the 10-year yield right now, 9 basis points higher. That is at 392. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Paul and Alex.
All right, thanks so much, John Tucker. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news in business and economics and finance through our lens of our Bloomberg Intelligence folks, because they cover 2,000 companies and 130 industries worldwide. So back to that retail sales data. Good news, I guess. You look at the two-year, though, bonds yields are up by about 12 basis points, which is a head-scratcher for me because the news is good, so good news is good news. That's at least what the equity market is saying. But then the bond market, what is that telling me? Luckily, we're going to talk to Veneer Bhanshali. He's founder and chief investment officer of Longtail Alpha. Hey, Veneer, are we looking at the bond and equity market telling us the same thing about retail sales right now?
I think they're slightly different. I think this has been a problem, not just this year, but for a couple of years now. I think the equity markets are being driven by a lot of forces, external investors, buybacks from large corporations, retail buying a lot of stock. The bond market is not that convinced. I think the inverted yield curve, certainly we can talk about it, is telling you a very different story. I think long-term yields are too low here, which is part of the reason why retail sales and the economy is strong and keeps getting stronger.
What do you make of a week ago Friday? That was a real shock to the marketplace, and we saw dislocations. I mean, we had the VIX, which is now below 15, was above 65. What do you make of that trading activity we saw a week ago Friday, Veneer?
Yeah, so, I wrote about this last week. What we've observed over the last few years is that the intensity at which markets are selling off and the big spikes is getting bigger and bigger. It happens over a very short period of time. And, going back to 2007, 2008, where it used to take, months and quarters. Now it's just taking weeks and days and maybe hours. And last Monday was, again, you couldn't have done anything except if you did something in the pre-market. Nikkei was down 12%. We were up that night, all night. And, again, it was just an air gap. There was absolutely no liquidity. And I think that's just one of those warning shots that tells you how levered the system is and how illiquid the system is. And I don't think that was the end of it. I think even today, the massive rally we're seeing is happening on extremely illiquid conditions.
I thought positioning, though, if we just stick with the bond market for a second, I thought positioning was all cleaned out now. That after the turmoil the last couple of weeks, now we have a cleaner read. Is that not the case?
I don't think so. I think what happened was people tried to get out. I mean, it's like a very big elephant trying to get through, the eye of the needle. I think some people got out maybe in panic on Monday and Tuesday, and then a lot of systematic strategies started to reverse. As VIX dropped, like Paul just mentioned, from 65 pre-market to about 20, many systematic strategies that are indexed to the volatility market have to re-lever. And I think that's what you're seeing today. Very illiquid, billions and billions coming back into the market, and there's really very little liquidity for them to buy the risk assets back.
Veneer, what do you think our Federal Reserve is going to do next month?
Well, I think they have to ease. Now that they've conditioned the market, they have to ease. And I think, that could be a 25. I don't think they're going to do 50. It'll be too aggressive. My sense is they're going to do a hawkish ease. They'll do 25, and like the ECB, they'll say, we'll wait and see what happens, which is exactly what they should do at this stage. And I think, that could set the stage for the next round of the carry trade unwind. I mean, it's trillions out there, trillions that have been accumulated over, 2 decades or so, because U.S. rates going down, Japanese rates going up, compresses the yield spread, meaning a stronger yen, which could generate the next round.
And so you think that we'll see a hawkish ease in September, but a hawkish ease doesn't seem to me a carry trade unwind. It would be more the more dovish they are, no?
Yeah, possibly. It depends on, again, the carry trade unwind, right? The currency markets is driven by the short rate differential, right? So U.S. rates come down 25 basis points, and let's say Japan has to raise another 25 basis points. That 50 basis points has a very significant magnifier effect on things like the cost of carry and so on. And I think that's what's going to drive things in the short run. So when I say hawkish ease, I mean they're going to ease, but then they're going to try to manage expectations for rates, call it 2 years out or 5 years out. That this is not the beginning of a 10 ease cycle, which is typically what happened and what the market's going to try to build in right away.
Veneer, in the fixed income space, where do you see value here? Do you, should I just stick with my 2-year treasury north of 4% here, or should I take some credit risk?
No, I like the 2-year note. I think, Paul, the 2-year note and T-bills, just a month ago, the auction cleared at, close to 5%. So I think if you can get a, 4% yield on 2-year notes or 5.25% on T-bills without taking any risk, duration risk or credit risk, I think that's a great place to be. And talking about credit, yes, it could tighten, but I mean, it's trading at basically all-time tights right now. I mean, investment grade credit and high yield credit, you really have to bet that there is nothing on the horizon that could upset the apple cart. And I believe there's a lot out there. So you have to be careful right now.
Well, yeah, that was an interesting, that's an interesting point, because when we saw the VIX spike, we didn't see the blowout in credit spreads in a way that one might have thought. Why do you think that was?
Yeah, I think the market was waiting, right? So we were here early in the morning, and we were watching the VIX at 65 and the futures, VIX futures only getting up to about 30 something. And the credit market waits and sees, right? Because credit, you can think of it as a long-term put on the equity market. And the fact that the VIX came down was a breath of relief for the credit markets. Spreads did widen out, and CDX spreads did widen out to about 57 or actually mid-60s from 52, 53 the week prior. But then as the VIX came down, people basically said, okay, this VIX spike is not translating into long-term equity volatility rise because the VIX curve was inverted and so on. And credit markets watched that pretty carefully. And basically that was the reason for the credit markets to kind of settle down. Again, if you believe like I do that that was only the first round, I do think you have to be careful because the next time around, if there's a big shock to the system, credit spreads could widen and stay widen or even widen more.
Veneer, do you guys have exposure to alternative investments? Is that part of your outlook?
So we're direct investors in the market, so we don't allocate to other funds. Obviously, we're trading, all the futures and options and so on for our investors. But yes, we are looking at all the alternatives as signals on what might be happening. So you have to be pretty hooked on to what everybody else is doing in today's market.
What do you think is going to be the trade around the elections? Like, I get the Fed, we got to get through that, right? But there's got to be some political and geopolitical risk hedging that we're going to see crop up. How do you think about that, particularly when it doesn't really matter who's going to be in the White House, in that it feels like deficits are just going to be blown out no matter what?
Yeah, I think a lot of it is priced in, right? So a couple of months ago, when I was talking with some of my colleagues at Bloomberg, my view was that Mr. Trump was probably going to win. It was pretty much baked in, and then with everything that's transpired, it's a very close race, as we know. And one of the big shocks from the 2016 elections was that the market got who was going to win wrong until the Florida returns were coming in, and then second, conditional on who won, the direction of the market got completely wrong. It sold off, limit down, and then limit up. And I think that's the possibility here. So the elections could be extremely volatile. One is we don't really know who's going to win. And secondly, we don't know, conditional on who wins, what the market does. And I think that's the surprise that you've got to be prepared for. And given that, we believe there's a very good opportunity generally to be long volatility, right? Because volatility fixes back to below 16, 15 almost. It's a great time to bet on the unpriced event possibility of something that market is not discounting actually happening. One of them could be Kamala Harris wins, and instead of the market selling off, there's a massive upside rally in the market because that's really not a priced outcome in the market today.
All right, Veneer, we really appreciate it. Thank you so much. Really great to get that perspective. Very helpful. Veneer Bhanshali, he's joining us, founder and chief investment officer of Longtail Alpha. Don't you kind of wish, if you're a market participant, you could like put in a position and then like go away for 8 months and then come back and see if it made money?
Well, it's called, again, investing in the S&P 500. That's why you see those index ETFs.
True.
Are just getting so much fund flows in there. Because a lot of people are saying, for most of folks out there, just buy an ETF that mimics the market and just go away. I mean, from a cost perspective and a return perspective, probably a good strategy.
Yeah, it's fair enough. You have it. The rally continued in the equity market here. The Nasdaq is up almost 2%. Volume, though, a little bit mixed. Mari Shore is a senior equity analyst at Columbia Threadneedle Investments. We'll be talking after the break about those retail sales and also what do you do with a market that continues to rally on a good news equals good news kind of situation. But for now, let's get to world and national news. Everything you need to know with Michael Barr. Michael Barr.
Thank you very much, Alex, Paul, John. Families of Israeli hostages and other demonstrators protested outside the headquarters of Prime Minister Benjamin Netanyahu's Likud party in Tel Aviv today. They are calling for an immediate deal as Israel-Hamas ceasefire talks resume today in Qatar. Zahiro Zahar Moore, the nephew of a 79-year-old Israeli hostage, criticized the country's efforts to secure the remaining hostages in Gaza.
We know there's a summit today. We put very little hopes on the Israeli delegation's seriousness to sign the deal, and we call upon the nations of the world, help us get this situation remediated.
Gaza ceasefire negotiations involve officials from Israel, Qatar, the U.S., and Egypt. Hamas will not be sending a delegation. A major victory for the White House today. A drug deal, they say, will save Medicare enrollees more than $1 billion. President Biden and Vice President Harris are making a historic announcement about lowering the cost of 10 drugs for Americans on Medicare. Editor-at-Large of Public Health for KFF, Dr. Celine Gounder.
The medications we're talking about are some of the most commonly used and include blood thinners like Eliquis and Xarelto, diabetes medications like Januvia and Jardiance, as well as medications for heart failure and rheumatologic diseases.
Dr. Gounder spoke to CBS. Minnesota Governor Tim Walz and Ohio Senator J.D. Vance have agreed to debate each other on October 1st. The debate will be aired on CBS. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Let's start with the economic data. Retail sales topped Wall Street forecast. Retail sales advancing 1% for the month of July. That's the most since early 2023. Don't count out the American consumer, helping push stocks higher, and bond yields, they are surging. In the meantime, Katie Kaminsky at Alpha Simplex Group says maybe the Fed may not have to cut interest rates as aggressively as some are forecasting.
I would say that there's enough evidence that we're going to see a cut, but I think that people got a little bit too excited saying 100 basis points, 50 basis points. I think the Fed is going to analyze all this data and really sort of determine, given that inflation has come down, perhaps it might be time to consider a shift in policy.
Walmart among the most active, up close to 7% after they lifted their full-year forecast. Ulta Beauty up 10%. Best performing stock in the S&P 500 after Warren Buffett disclosed a stake in the company. Cisco Systems not far behind, up over 8% after its earnings results not as bad as analysts feared. The two-year yield 12 basis points higher, 4.07%. The 10-year yield up close to 10 basis points. That's at 392. S&P 500 65 points higher, up 1.2%, 5520 on the index. The Dow Jones Industrial Average up 344 points, and the Nasdaq 100 up 377 points. That's a rise of 2%. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Alex.
All right, John Tucker, thanks so much. I'm Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We are broadcasting to you live from our Interactive Broker Studio right here in Midtown Manhattan. Cameron Kreis, macro man, writes at Bloomberg, like, if the economy is slowing down, someone may want to tell the consumer, because clearly retail sales didn't point to that. So I thought that was quite a good point. And you look at equities just flying higher here. Joining us now is Maury Shore, senior equity analyst at Columbia Threadneedle Investments. Maury, what good news for stocks? Is that a fair statement? We get good news by the equity market.
Absolutely, yes. I think the results today show us that the consumer is more stable versus what was feared. We had heard more throughout the month of July that there was a slowdown happening. But in my view, the consumer backdrop remains stable, and the differing results that we see between different retailers just shows, who's gaining share and who's losing share. But when I looked at the trends today, I think although the high level retail sales number was better than feared, I would say when you dig a little deeper, the trends are still mixed. On the one hand, we see the consumer still choiceful in their spend, spending more on services over goods and needs over wants. At the same time, within discretionary, we do see some signs of life in categories like apparel and even electronics. So still a very mixed print, but certainly better than feared.
Back to school, holidays. What are some of the retailers telling me about some of the big events coming up here for the retail sales number?
These events are very important because, as we've heard from every retailer for years now, the consumer is shopping very close to need. So, the tone from Walmart in terms of the trends they saw ending the quarter and in August to date were very positive. Again, they've seen very consistent results. I think the consumer will show up for back to school in the same way that they showed up for holiday. And again, I think we're seeing that in some of the data today with the strength in electronics and even in apparel, where there are some new trends that are resonating now.
So in the equity market then, is it difficult to pick the winners and losers? Because it does feel like it's hard to get a broad macro read. Like, the data's slowing, we know that. Check that box. But in terms of what they're buying, I would have thought the Tapestry would have struggled, right? I would say, okay, at some point, the coach passing on price increases was going to max out consumers. It doesn't look like that's actually happening. How hard is it to do your job?
It has become more challenging, especially because the markets are so volatile, right? And hedge funds and macro funds are just having such a large impact in how the stocks are trading. But we are seeing a very clear difference between share gainers and losers at this point. And so what we're really trying to do is focus on the companies that are gaining share, where we see the potential for positive earnings revisions. The problem is a lot of those stocks are screening as pretty expensive.
Right.
You know, names like Walmart and Costco. On the other hand, there are names where even with more modest revenue growth assumptions, there is a real margin in free cash flow growth story there. So that is like the other group of stocks that we are trying to focus on. But to your point, it's very hard to listen to what one company is saying and extrapolate that, because it really feels like within a kind of lackluster consumer or retail backdrop, there are still some companies, like Walmart is a perfect example, that are able to do very well right now.
Hey, Mari, what kind of deals can I get if I go shopping out there? How promotional are retailers out there these days?
Are you asking that for me?
Yes.
That's so sweet.
Yeah, I think we talked about this last time. So since the holiday season of 23, the retailers' inventory levels have been much better positioned. Not perfect, but much better positioned. So while the retailers remain aggressive on promotions to drive traffic, you're not going to see the crazy promotions that they had to run when they were heavy on inventory. And we should also see fewer markdowns, which will be very good for margin. But at the same time, everyone recognizes that the consumer is stretched. And I know both like the consumer staples companies and a lot of the retailers and brands are talking about needing to promote to drive volume and traffic.
I was reading an article the other day that retailers are already buying their inventory for the holiday, which totally makes sense. I mean, a lot of cargoes were coming into ports, et cetera. How confident do you think retailers are in their inventory buildup for the holiday?
They seem pretty confident. You know, what we've seen on the freight side is a recent rise in ocean freight rates. So that's something we've been talking to the retailers about. Right now, a lot of them are locked into their contract rates. So it doesn't sound like that is a near-term risk to margin, but definitely something we have to monitor for next year. There's also been some disruption in the Red Sea. We've heard about recent protests in Bangladesh, which could impact companies that are sourcing from there. But so far in our conversations with retailers, it doesn't really feel like any of those things are going to result in any real near-term disruption to the business. And it sounds like, you know, the outlook for a holiday in terms of getting the inventory that they want and need is pretty consistent and stable.
And Mari, when I was looking at the Walmart numbers, again, what jumps out at me, as it does so many quarters, is their e-commerce up 22%.
Yes.
Boy, they're right there with Walmart, aren't they? I mean, they don't take it. I mean, with Amazon, they don't take a step back from Amazon at all, do they?
Right. No, absolutely not. I mean, remember, Amazon is still clearly the dominant player in this category. I mean, overall, e-commerce is about 30% of total retail sales, and Amazon is almost half of that. So Amazon is obviously operating off a much larger base. Having said that, Walmart is now growing faster than Amazon. I think the only other company I follow that is growing at a similar rate is actually Costco. And I think what's happening specifically in the case of Walmart is a lot of their new initiatives, building out their marketplace, building out fulfillment, building out their membership model, building out advertising. All of those initiatives are finally coming together and really driving their e-commerce business. And so the thing that's so impressive about Walmart as we look at their results is it is very clear that they are gaining share across channel, across category, across income demographic. And that broad-based strength, I think, will drive strength in their results for the foreseeable future.
All right, Mari, we appreciate it. Thank you so much, Mari Shore, Senior Equity Analyst over at Columbia Threadneedle Investments, joining us from Boston, Massachusetts. And again, now I'm addicted to this ALTD Go screen. And I'm looking at sort of the estimated sales we're looking at here, and they're still beating competitors.
Yep, I know.
Anyway, ALTD Go. Really cool function on the terminal. You should definitely check it out. Much more coming up. I have the best work from home story. You'll be surprised. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
And I'm John Tucker in the newsroom. Look at some of the company stories we are following. Apple, which is seeking new sources of revenue, moving forward with the development of a pricey tabletop home device that combines iPad-like display with a robotic limb. The company now has a team of several hundred people working on the device and uses a thin robotic arm to move around a large screen, according to people familiar. The product relies on actuators to tilt the display up and down, make it spin 360 degrees, offering a twist on home products like Amazon's Echo Show 10. Still unanswered is, can it fetch me a beer from the fridge? Got my priorities straight. Kraft Heinz spending millions to climate-proof its ketchup. The company won't divulge specifics on its research, but says it's poured millions of dollars into Heinz seed research over the past few years, developing tomato varieties that can survive hotter, drier growing seasons. The $5 billion plus Heinz brand is critical to Kraft Heinz, the $42 billion packaged food giant that owns it. It produces, this is like a trivia question, produces 660 million bottles of ketchup each year, 300 million of them right here in the good old U.S. The tomatoes used in Heinz ketchup are a particular point of pride. At its Heinz Seed Research Center in California, the company spent more than 150 years evolving the fruit to ensure that tomatoes growing in the field can be processed into perfect tomato paste. At Six Flags Entertainment Corporation, ticker symbol FUN, the biggest amusement park operator in North America, announcing a new lineup of park investments. They include 7 new roller coasters. The Wrath of Rakshasha, I don't know if that's right, it's going to shatter multiple world records. Can't wait. And that's your company news.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Thursday, everyone. Happy Friday to Paul Sweeney. I'm Alex Steele alongside Paul Sweeney and John Tucker. This is Bloomberg Intelligence Radio. We bring you all the top news in business and finance right here at our headquarters in Midtown Manhattan. Also check us out on YouTube. Let's also get you up to date with world and national news. And for that, we go to Michael Barr. Michael?
Thank you very much, Alex. Paul, John, mediators have started a new round of talks aimed at halting the war in Gaza and securing the release of scores of hostages. The U.S., Qatar, and Egypt are meeting with an Israeli delegation in Qatar today. U.S. Ambassador to Israel Jack Lew said time is running out, and we don't know how many more chances we have to bring this negotiation back together and to have a successful conclusion.
It's of enormous urgency because it's also part of the whole question of maintaining some stability in this region and not having violence escalate.
U.S. Ambassador Jack Lew. There has been an arrest in the death of Friends star Matthew Perry. That's according to the New York Times. Law enforcement agencies have been working to identify the source of the ketamine that led to Perry's death. The Los Angeles County Medical Examiner's Office said in an autopsy report released in December that Perry had died of acute effects of ketamine. Hurricane Ernesto has dropped torrential rain on Puerto Rico and knocked out power for nearly half of all customers in the U.S. territory. It was gaining strength as it moved over open water toward Bermuda. Speaking out for the first time since the Paris Summer Games, Australian breakdancer Rachel Gunn, known as Ray Gunn, spoke after a wave of criticism over her Olympic performance, considering it poor. The 36-year-old Sydney University professor did a kangaroo dance and other moves that were not everyone's cup of tea. She scored a 0. Gunn responded on Instagram.
I'm glad I was able to bring some joy into your lives. That's what I hoped. I didn't realize that that would also open the door to so much hate, which has frankly been pretty devastating.
Breakdancing, which made its Olympic debut last weekend, is not on the competition list for Los Angeles in 4 years. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Alex, Paul, John.
All right, thanks so much. We appreciate that, Michael Barr. So Paul, in case you didn't know, really hates the work from home thing. He likes people in the office, FaceTime with the boss, and the whole thing. But what do you do when your boss is the work from home, but you still have to come into the office? So apparently, the new Starbucks CEO, Brian Niccol, will be allowed to work 1,000 miles away from the actual headquarters. So the incoming CEO agreed to commute to Starbucks' base and travel as needed to do the job. Meanwhile, he'll be living in Newport Beach, California, which is near Chipotle, which is exactly the job he had before. And he also will get a nice little compensation, about $10 million in cash signing bonus and a $1.6 million annual salary.
When you say commute, I'm guessing that's not by car or train.
I mean, I don't actually know
I
what
assume
that
he's
means.
got access
Private
to the
plane?
Gulf Stream and everything, but it's just a bad look if you're not going to relocate to the hometown of the headquarters of your company. What does it say to your the folks that work for you? I mean, now, granted, it's Newport Beach, California versus Seattle. I get it, but the guy's raking in a lot of cash. All in, his comp could be $120 million. A lot of it's to replace, I guess, some stock and options he's leaving it at Chipotle. But the stock yesterday, on the announcement of his signing, added $21.4 billion in market capitalization. So whatever they're paying this guy, totally worth it, I guess.
And the irony, though, is that the white-collar employees at Starbucks were required at the beginning of last year to return to the office at least 3 days a week, and some workers really didn't like that. So I'm interested to see what commuting means. Like, is he going to do 3 days a week in the office like everybody else or not? And apparently the company will pay for housing costs for as much as 3 months while he finds that secondary accommodation in Seattle.
Okay. And I'm guessing there's a Gulf Stream involved to some extent there, so he can get back and forth from, LA to Seattle pretty quickly.
Yeah.
I mean, fly up Monday morning, come back Friday afternoon, spend the weekend at the beach, but you got to have a place in Seattle.
I called those.
Yeah,
But, yeah, like Paul does. I mean, obviously.
Jersey Shore.
Yeah,
Exactly.
that's what we do here. All right, much more coming up in the next hour of Bloomberg Intelligence. Equities on the upside. NASDAQ up almost 2%.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Thursday, everybody. We almost made it to Friday. This is Paul Sweeney's Friday. I'm Alex Steele alongside Paul Sweeney and John Tucker. This is Bloomberg Intelligence Radio. We have a great hour lined up for you here. Lots of earnings that we're dissecting. Deere, that stock up over 5%. We're going to talk to Chris Ziolino. He's Bloomberg Intelligence Senior U.S. Machinery Analyst. Plus, Woo Jin Ho, the expert over at BI when it comes to Cisco. Less bad is the nice takeaway here. Plus, David Kudla, founder and CEO and Chief Investment Strategist over at Mainstay Capital Management, will be joining us. And Janice Q is Bloomberg Healthcare reporter. She's going to help us understand what Mpox is, the outbreak in Africa, and the global health emergency. We're going to break all of that down for you. Let's kick it off here with a Bloomberg Business Flash with our own John Tucker.
All right, Alex and Paul, it is a Wall Street rally. S&P 500, 2.5% away from its record close that we hit back in mid-July, and on track for the 6th straight gain. Treasury yields leaping in the bond market following the encouraging economic data with retail sales. Shoppers increasing their spending at retailers last month by a lot more than what economists were looking for. Meantime, Tiffany Wilding at PIMCO says today's retail sales report confirms U.S. growth remains positive.
I think the bottom line is, just looking through this, is this completely confirms that the U.S. was not in recession in July. And obviously the risks of that, or at least the market's focus on the risks of that, were increased because of the unemployment report, and specifically the increase in the unemployment rate.
And the two-year yield up 12 basis points, 4.08%. The 10-year yield, 9 basis points higher. That's at 3.92. Let's go through some of the shares that are trading. Bailey's going to take a deeper dive, but shares of Cisco Systems rising the most in 4 years. The company delivering a bullish revenue forecast for the current period. Walmart shares climbing. Right now, they are up 6.6% after the retailer boosted its full-year projections. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. And that is your Bloomberg Business Flash. Alex and Paul.
All right, JT, thank you so much. We appreciate it. Alex Steele, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube. So head over to youtube.com and search Bloomberg Podcast, and that's where you will find us. S&P 500, as John was just reporting, up 1.3%. That is the high of the day, trading an intraday high here. So some good strength there across the board in these markets. Let's see where the action is. Under the hood for that, we'd go to Bailey Lipschultz. He covers all the equity markets for Bloomberg News. Bailey, what are you looking at?
I know you've already talked about it, but the stock of the day, it feels like, but far and above, is Walmart. Right now up 6.5%, boosting their full-year outlook, beating expectations really across the board, drawing out some of those bargain-hunting shoppers. I don't know about either of you, but I don't actually go to Walmart, but I will say I'm a big fan of Sam's Club. I am a fan of Costco as well, but I have not frequented the Walmart.
Well, it's hard. Walmarts aren't aplenty in New York. That's the
well, you're in Jersey now.
I'm in Jersey, yeah.
Oh, okay, so you have no excuse. He just moved.
I don't know where the closest Walmart is, though.
Ours is in Brick, Route 70 in Brick.
I'm pretty sure you're going to find that out relatively soon.
Yes. Probably will.
Yeah.
But all-time high for the stock. So when you look at it, what its returned over the last 12 months, 40%. So outperforming the S&P by about 14%, and more than doubling the broader consumer space, at least as we track it among S&P 500 companies.
But do people go in to shop for groceries and then say, oh, gee, I need a flashlight too, and walk over to aisle 27 and get a flashlight?
Yeah.
Okay.
I mean, when I go there, so I go up there when I'm in Massachusetts, and it's like, oh, I got to get like a cheap, I don't know, ski thing for my daughter.
Yep.
And it's great. They're in there, you're out, and then you're like, oh, look, it's a $2 t-shirt. Yeah, I need that. And then you kind of like motor around.
That's how my life has been at Target. Though I will say, when I buy
Yes.
groceries at Target, I feel like they're far more expensive than when I go to my local ShopRite or Acme.
Really?
But that's
Okay.
just
That is interesting.
sample size of one.
Okay, Nike. What's going on here?
Nike up more than 4%. This coming after we are in 13F season, or at least the deadline for investors to file their holdings through the end of the second quarter was yesterday evening. Bill Ackman's Pershing Square having a decently sized stake, about 3 million shares in Nike, worth $229 million. One thing that stands out, though, because that is bookmarked on June 30th, it's not immediately clear if Pershing bought shares before the stock had a record one-day drop on June 28th, or if they bought ahead of that. But certainly an investment for Ackman, for Pershing Square. They had been touting when they were pushing that closed-end fund, 2 new investments. So Nike, one of the two, and that's why you're seeing shares up 4%, but still a pretty ugly chart when you look at it, all things considered. Trading around $82, had hit a 12-month peak back in December at 123.
Yeah, we still like those sneakers. What can we say? Okay, also, Bristol Myers, what's going on here?
Yeah, another one that outperforming some peers, but kind of in line with the S&P 500 right now, up 1.2%, ticker BMY. This coming after highly anticipated updated negotiated prices for Medicare around those 10 largest medicines in the world. According to some of the analysts, saying that the pricing for their blood thinner Eliquis, benign, better than feared. So that's kind of why investors may be pushing back into the stock. But again, Bristol Myers has been left out of the broader rally. It peaked back in 2022 at $81. Right now, trading around 49. Investors more than happy to pay up for the likes of Eli Lilly, for Novo, especially those weight loss drugs producers. So certainly one to keep an eye on. But Bristol, big company, still dominant in the blood thinner and cancer space, but not really living up to, in general, the expectations that investors have kind of built out for the space.
All right. Yeah, but getting that out of the way really will be helpful for all of these guys. All right, Bailey, thank you very much. We appreciate it. Bailey Lipschultz joining us, a Bloomberg senior equities reporter. All right, let's go to Deere. So I mentioned it. It's up over 6%. It wound up cutting costs, but its earnings also kind of less bad than feared. My question, though, always is, if you have corn like at $4 a bushel or under, which because conditions are so good for corn right now, that's going to be really tough for farmers. And then how do they go buy all the fancy equipment?
And you're right. I didn't look at corn, $4 a bushel.
Yeah, and there was a great piece, I forget where I read it, that talked about how it's actually technology and innovation that's allowing American farmers to do so well, as in have so much crops, but then that hurts on the price side. Very cyclical industry there. So Christopher Cellino is Bloomberg Intelligence Senior U.S. Machinery Analyst, and he joins us now. Give us your take on Deere earnings.
Alex, I mean, the results really weren't as bad as many had feared going into the quarter, both from a top-line perspective, margins, earnings, all kind of better than what we had expected in what is a pretty challenging environment, given the commodity price backdrop. I think one thing to take away from the quarter is that, pricing really continues to be remarkably resilient. We actually saw pricing accelerate here in the quarter in their ag businesses. And then really they kept their 2024 guidance unchanged for the most part after all their peers cut during the quarter. So while we're not quite out of the woods yet, and there's certainly more headwinds from a demand perspective moving into 2025, I think this probably just, alleviates some of the concerns over a more severe downturn in the near term.
Growing up in my lawn mowing days, I always wanted a Deere tractor, but
doesn't?
my dad would never go for it, so I had to push mow our lot, which was a little over an acre. I mean,
something.
That was a lot, and I'm like, for $3, by the way. Ooh. And I'm like, can you kick in for a Deere tractor? No, was the thing. Now, I got the Vespa scooter, so that's one of the things off my bucket list, but not the Deere tractor. I'm still working on that.
I feel like you need
And what would you do with that?
Exactly. I have
sit in it.
Sit in it, drive around town. So talk to us, Chris, about what Deere is saying about the U.S. farmer, because it just feels like that's Deere is a real proxy for the U.S. farmer.
Yeah, and certainly nothing runs like a Deere, Paul. Yeah, the backdrop isn't really favorable for the farmer, at least for the balance of this year and probably into next year. commodity prices continue to be under significant pressure. If you look at corn, soy, wheat, all down, 15, 25% plus year to date. Farm income is going to be down north of 25% this year. New and used inventories are still quite elevated. We don't have these big pricing tailwinds that we had over the last 3 years. So it's certainly a challenging market, and input costs are relatively elevated. So farmer incomes are going to be under pressure. Really the focus with Deere and really all OEMs now is really to try to kind of right size the inventory in the channel. Inventories are too high. So there's going to be a lot of focus on underproducing retail demand for the balance of this year, with the hopes of producing in line with retail demand. And then, where the retail environment shakes out for next year, it's still a little bit up in the air, but certainly from a commodity price perspective and a farm fundamental perspective, certainly no signs of a bottom yet.
Well, also, I should point out, too, when we say, less bad than feared, North American sales were still down or lower by 15%, and revenue in South America down by 15 to 20%. Do we feel like this is definitely the trough, though?
Yeah, I think it's a story of the nicest house on a bad block,
yeah,
right?
Exactly.
I mean, it's still a pretty difficult environment, and it's still pretty fluid. I don't have a ton of sense if we have really good visibility on a trough yet. I think that's where investors are, starting to coalesce around 2025 will be a trough earnings year. But it's still kind of a little too early, I think, to draw any conclusions. I think we'll have a better idea probably at the end of next quarter and how we exit the year in terms of an inventory perspective. And if they're able to kind of get through those inventory cuts and we're kind of more aligned with the demand environment, then I think it's even possible to see earnings growth and margin expansion, even if we're looking at a lower or slightly lower retail environment.
Chris, we heard from, Home Depot that said some of their customers were deferring big projects, waiting for interest rates to decline. And has Deere said anything about that? If I'm a farmer, do I say, man, I don't need the tractor this year. Maybe I'll wait next year when maybe my financing rate will be a little bit lower?
The large ag, the large professional farmer, a little less sensitive to the interest rate narrative. It certainly has more of an impact on their small ag and turf business and utility customers. They are much more interest rate sensitive, but that market's now been weak for multiple years. So I think we're at a trough or coming into a trough on that market. And then I think, some new information that we got this quarter is that particularly on the construction side of the business, now they took down some of their numbers for the year, and actually construction was one of the disappointments in the quarter, as some of the rental fleets and construction equipment customers slowed some of their order velocity, and they pulled back on some of their capital spending. So, and the higher rates were a contributing factor to that. So I think that's where you're seeing more of the impact, less so on the large professional farmer.
I hired Cialino out of Global Data to Bloomberg Intelligence, I don't know, 12, 13 years ago. He didn't know anything. Now he's a rock star. I mean, he talks to people all over the globe. He talks to these companies. He knows what he's talking about. Chris Cialino, one of the good ones at Bloomberg Intelligence, covering some of those industrial stuff along with Karen Ubelhart, talking about Deere, some better than expected earnings. Another star in Bloomberg Intelligence is Woo Jin Ho, senior technology analyst for Bloomberg Intelligence, also in Princeton. It's like, boy, the nexus is down in Princeton. I wonder where the management team is of BIO. I guess they're on Nantucket and other places. Woo Jin Ho, thanks for joining us here. Cisco put up some good numbers there, and the stock's reacting. How about that? They finally see a little bit of life coming out of Cisco. What'd you make of the numbers, Wooj?
Well, look, hey, Paul, I don't know how I'm going to follow up Chris with that one, but I will tell you, I think, the inline print or slightly better print, decent order numbers, inline guidance kind of alleviates some of the fears that there wasn't going to be another downturn for Cisco. So the fact of the matter is, no surprises. If consensus estimates really didn't rise that much. But if you look at it from a valuation perspective, people were expecting a little bit more of a downturn, and it never happened.
Is this a situation of sort of under promising, over delivering, in that there's been a lot of leaks about layoffs? There had been leaks about, revenue and the struggles Cisco's going through. Is that part of the story or no?
And Alex, I think you make a fantastic point there, right? I think the reports of the layoffs was a concern of another downturn, which is driving potential layoffs. And look, they announced another 7% on headcount cuts. What's happening here is that they are actually going to reinvest the cost savings back into growth areas. Last quarter or a quarter and a half or so, they acquired Splunk, which is supposed to be growing at a mid-teens rate versus their traditional 2 to 5% growth rate for their core networking business. So I'm going to try to squeeze the cash cow as much as I can, reinvest for growth, and hopefully that growth is going to carry over to the next couple of years to help the valuations.
If I'm thinking, I don't know, 2, 3, 4 years out on the Cisco story, what am I banking on, Wooj?
Yeah.
The AI story.
Okay.
But in what way?
Right.
Like, clearly they're not going to make chips. So, like, in what way will they be the AI story?
And you make a fantastic point, right? So if you think about it, all the spend right now is on the infrastructure side. One of the things that Cisco has been betting on is that data is going to start taking over, and that's why they've made this transition from hardware to more software-ish. Splunk, you're actually going to get a lot of visibility into the data and the data created from these networks. And the hope is that they're going to monetize that data in some way at a much higher margin. Now, let me give you a case in point. If you look at the Splunk gross margins, they're about 83-ish%, mid-80s%. Traditional networking gross margins are around 62, 63%. Now, Splunk isn't enough to move the needle on the gross margin. You're probably going to get about 100 basis point improvement on the gross margin side because of the relative size. But over time, if that mix continues to grow, you can start seeing that gross margin start to inch up and start getting leverage into the model. And then you're going to hopefully get faster earnings growth if you're able to monetize that AI data.
I don't know. I've heard a lot of hope in that. Do we like a company that's based on hope? Like, where are the pitfalls then?
So I always characterize Cisco's fiscal 2025 as a transition year, and the guidance continues to confirm that it's a transition year. I do think that the story will evolve over the next couple of years, because if I think about a house being built, the first thing you want to do is to lay down the plumbing, and Cisco does have the plumbing. It's just that the AI plumbing isn't big enough for them. The data side is eventually going to take over, and once that data tailwind starts to take off, hopefully, again hope, Cisco will be a beneficiary of that.
Woo Jin Ho, thank you so much for joining us. Really appreciate it. Woo Jin Ho, folks, he's a senior technology analyst for Bloomberg Intelligence. We really got a great global technology research team. We've got them in Princeton, New York, London, Hong Kong, all over Asia, really looking at the entire tech stack, as they like to say. I learned that term from these tech analysts at Bloomberg Intelligence, but we've got them all over the place, and they do a great job. And it's all coordinated. Mandeep Singh kind of makes sure all these tech analysts all over the globe are, speaking from the same page here. So giving you a global technology view. Appreciate that. S&P 500, it's up about 1.45%, kind of an intraday high, kind of hanging right there. It's been a solid day here. The NASDAQ up over 2%, speaking of technology. So pretty interesting here. So we'll keep an eye on those markets, but I actually have the wrong screen up. I have the pre-market screen up. The cash market, again, still up 2% for the NASDAQ. And the Russell up 2.6%, so that rotation trade we saw several weeks ago kind of getting a little bit more legs here. So we'll keep an eye on that. Coming up, David Kudla, founder, CEO, and chief investment strategist at Main State Capital Management. He's going to join us in just a moment to give us his thoughts on these markets, this economic data, this Federal Reserve. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. It is a stock rally today and a bond sell-off. S&P 500 up for a sixth straight session. At Walmart shares, they are soaring right now, up 6.6%. Cisco and Ulta Beauty among the best performing stocks in the S&P 500. Cisco's earnings better than analysts feared. Ulta Beauty getting a surge after Warren Buffett disclosed he was investing in the company. And the world's biggest retailer, Walmart, again, those results showing a great quarter. We also had retail sales accelerating in July for the most since early 2023, leading to that bond sell-off. Two-year yield right now up 14 basis points, 4.10%. The 10-year yield is 10 basis points higher. That's at 3.93. As for the S&P 500, 74 points higher, up 1.4%, 55.29 on the index. The Dow Jones Industrial Average is up 472 points. That's a rise of 1.2%. And the Nasdaq 100 right now up 389 points. That is a rise of 2%. And the VIX, Wall Street's fear gauge, that is lower right now, right around 15. And we check the markets for you all day long. Right here on Bloomberg Radio, I'm John Tucker, and that's your Bloomberg Business Flash. Alex and Paul.
All right, JT, thank you so much. We appreciate it. Alex Steele, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. So head over there and just check out Bloomberg podcast, and that's where you'll find us here. Thinking about where we were a week ago Monday, the VIX over 60, big sell-off in the markets. It's almost like, please look at the markets today. It's almost like it never happened. Are earnings that good? Is economic data that good? Let's check in with a professional. David Kudla, founder, Chief Executive Officer, and Chief Investment Strategist. He kind of does everything there at Mainstay Capital. He joins us from Troy, Michigan via Zoom. David, what do you make of a week ago Friday, what we saw, particularly in the morning, to what we've seen since then? What are these markets telling us? Uh-oh. Okay, we get a little problem with the audio there. That's a technical thing. Sometimes we get
technical
audio. We
Mm-hmm.
got the video. We just didn't get the audio, and I think you need for radio in particular.
Got me now?
You need. We got him now. David, what do you make of what we've seen over the markets over the last kind of week or so with that big sell-off a week ago Monday?
Right. Yeah. So we had that growth scare because of an ISM, a poor ISM, and non-farm payrolls number 2 weeks ago, and that was aggravated by the yen carry trade issue. With a week ago, with jobless claims, we got a little bit of help there. And of course, the data today with retail sales, jobless claims a little better than expected. But I think look at the data yesterday, or let's say Tuesday through today. Tuesday, we had PPI coming in well below expectations. Yesterday, we had CPI coming in slightly below expectations. Headline inflation is below 3% for the first time in a long while. And now today, we have retail sales, kind of a blowout number when we're expecting 0.4 and get 1%, which says the consumer is still strong. If I'm going to loosely borrow a Mark Twain quote, reports of the consumer's demise have been greatly exaggerated. Mm-hmm. We need the consumer to stay strong. It's 2/3 of our economy. They were certainly strong last month. So look what we have. We have growth with lowering inflation. I don't want to overstate it, that it's a Goldilocks economy, because we do have a real fear of recession. We need the Fed to get started on their easing cycle. And I think it'll be 25 basis points and not 50 in September that many are predicting. Mm-hmm. But they need to get going. And they have the room to do it. We're on a good glide path on inflation. When we have growth with inflation slowing, that's a pretty good scenario for the economy.
Why are rates up then right now in that scenario you just lined up?
Yeah, well, rates are up today because the retail sales number came in so strong, right? More than double expectations. And, the growth scare of 2 weeks ago, it's really been a significant change. The comparison that Paul was talking about from 2 weeks ago to today. So, Alex, we've really seen a terrific number that tells us the consumer is still out there buying. And that's all important, right? For the U.S. economy, the consumer is all important. It's two-thirds of our economy, and that was a very reassuring data point. But it means the economy is a little bit stronger than we thought. Bond yields go up 5 or 7 or 9 basis points.
So what type of stocks, what type of sectors work in an environment, David, where the economy is hanging in there, maybe slowing, but hanging in there, but we now have the prospect for lower rates? What kind of sectors screen well for you guys?
Yeah, so first of all, we like the secular growth stories like mega cap tech for a long time, and we still believe in the AI plays. But now we can look at cyclical plays. Take financials, that have struggled so much over the past years. Now we actually had the yield curve uninvert briefly last week, and we're certainly seeing a steepening of the curve. And as the Fed starts to cut rates, we'll see that steepening of the curve, which will be good for financials because NIM, net interest margin, improves. So we like financials. We've been extending bond duration. We had for over a year and probably 15 months had been in ultra short-term bonds because we just wanted to capture the yield and we didn't want the interest rate risk. And that was a good play. But now it's time to be extending duration because we know the Fed is going to be cutting. Forecasts are still about 100 basis points by the end of the year. That's, with that easing in place, that means we want to lock in rates and extend our duration. And we also are broadening. It gives us an opportunity to broaden portfolios into small caps, values, cyclicals, mid caps, areas that we had been mostly buoyed in favor of large cap and large cap mega tech.
But what about the idea that with small caps, the PE ratio, so the P part wound up re-rating enough that, okay, maybe you want to buy it, but maybe that thesis is out the door a bit because small caps did have a run before the growth scare, but that the E part isn't really holding up. That's what I hear a lot about the small caps naysayers.
Yeah, 42% of the small cap stocks in the Russell 2000 aren't profitable. It's a struggle. If a small cap stock does well, it grows into the mid cap region and it leaves the Russell 2000. So here's what needs to happen for small caps is we really need what's coming, the rate cuts that are coming, avoid a recession, and the PE multiple of small caps is so attractive compared to large caps at this point. We were hitting earlier in the year historical highs, multi-year delta of PE of large caps versus small caps. So the attractiveness is there, but we need the right kind of environment. Data like today, we've seen what the Russell 2000 did today in early trading, up over 2%. And if we get the rate cuts, the economy can be slowing a bit, but no recession. That's a good environment for small caps, for value, for cyclicals.
Do you think the Fed is going to go 25 or 50 basis points, and do you even care?
First of all, that's a good way. That's a good way to ask that question. Do we even care? The most important thing is they get started. The first cut means they switched from a neutral stance to an easing bias, right? From neutral to easing. So the first cut is symbolic in that regard. I think that they will go 25 basis points because if they go 50, and I know what the case is for that, for the case that others are making, but then it raises a question: Are they doing 50 because they're behind? I mean, they've still got November, December. They've still got more meetings to achieve 7,500 basis points by the end of the year. Maybe even do a half cut later. I just wouldn't start there. Again, for symbolic reason. So I think they do 25. But the part about do we even care? The main point is they get started. Let's get going, Fed. Let's get the first cut in there and establish you have changed your bias to an easing cycle.
But to that point, something that I feel like is becoming more of the conversation. I think it was Bostic that mentioned this when he was speaking to the FT, is that you had a delayed reaction and transmission mechanism of policy on the way up with rates, so why not expect that then on the way down, which implies that we do need to see sort of a little faster, more aggressive cut so it filters through the economy a little faster. What do you think about that part?
I think that's actually, it's absolutely right. I mean, when we talk about Fed policy and the mistakes they made the mistake of 2021 of staying easy for too long. But continuing to buy mortgage-backed securities, making mortgages so attractive. People saw their house price go up 1.5 times or double in a couple of years, and they helped create the problem of inflation with the first policy here by staying easy for too long. And they probably are going, when we look back, they probably will have stayed tight for too long. 5.25 is a restrictive policy. Inflation is on a glide path to their target. It's time to get on with cutting rates. Probably should have cut 25 in hindsight. They probably should have cut 25 in July, and then they'd be ready for another 25 in September. And that's what might beg the question. They need to do 50 to get caught up. But yeah, our concern is they make the same mistake on easing as they did on easing now as they did on. They were easy for too long, went way up to drove it up to a restrictive policy, and now they got to get on with it.
All right, David, thank you so much for joining us. Always appreciate getting your views. David Kudla, he's the founder of Mainstay Capital Management, joining us from Troy, Michigan via Zoom with our news in New York City. Here's Michael Barr.
Oh, Alex, John, thank you. A bleak new milestone in the war in Gaza. The Hamas-run health ministry says the death toll has reached 40,000. This as ceasefire hostage negotiations resume today in Doha. The U.S., Israel, Egypt, and Qatar are participating, but not Hamas. People in Israel also want a ceasefire in Gaza. Families of Israeli hostages and other demonstrators protested outside the headquarters of Prime Minister Benjamin Netanyahu's Likud party in Tel Aviv today.
Had Netanyahu wanted them here, they would have been here. It's his sole responsibility, and this will be his legacy.
And White House spokesman John Kirby says they continue to have information that an attack against Israel from Iran could come with little or no warning. Tehran blames Israel for the assassination of a senior Hamas leader. Google confirms Iran-linked hackers targeted both the Republican and Democratic presidential campaigns. Bloomberg's Amy Morris has more from Washington.
The FBI inquiry began after a report from Microsoft described efforts by the Iranian government to access email accounts of presidential campaign staff members. In addition, Google says the Iranian hackers in May and in June targeted the personal email accounts of roughly a dozen individuals affiliated with President Biden and former President Trump. Google blocked numerous attempts by those attackers to log into those personal email accounts. And Google says the Iranian hackers successfully gained access to the personal Gmail account of one high-profile political consultant who it did not identify. In Washington, Amy Morris, Bloomberg Radio.
A doctor and multiple dealers have been arrested over the death of Matthew Perry. The Friends star died of ketamine, killed him back in October. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom. With this Bloomberg Business Flash, stocks are rallying and bond yields, they're surging. The U.S. consumer powering ahead, retail sales showing a broad advance. And Tom Porcelli, chief economist at PGIM, says the narrative at the Federal Reserve is finally shifting.
When Powell finally shifted to focusing on labor over inflation, which I would argue is long overdue, I think that's step one. And I think the next step is, hey, look, we don't think that things are really sort of slowing in a notable way, but we recognize that policy is calibrated for a completely different inflation regime than what we have right now. And so we can take back some of that aggressive tightening.
Right now, the two-year yield up close to 14 basis points, above 4%, 4.095%. 10-year yield up 9 basis points. That's at 392. In stocks, 9 of the 11 major industry groups in the S&P 500 are higher. Consumer discretionary leading the way. Ulta Beauty, best performing stock in the S&P 500. This is Warren Buffett takes a stake in the company. Cisco Systems not far behind. Its shares were up over 7%. They delivered an upbeat sales forecast, also cutting jobs. Among the most active, Walmart, biggest retailer, raising sales guidance for the year. S&P 500, 74 points higher, up 1.4%, 55.29 on the index. The Dow Jones Industrial Average up 455 points, and the NASDAQ 100, 399 points higher. That is up 2.1%. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Alex and Paul.
All right, thanks so much, John Tucker. You know what we go to Walmart for? We go to Walmart for like flowers and seeds and planting things.
Really? Okay.
Yeah.
Very good.
And by we, I mean not me.
Do
but
they have a
husband.
garden
Yeah,
department?
they have a whole garden department. Yeah, yeah.
I don't think
it's
I've ever
actually really
been
good.
inside a Walmart.
What?
Yeah, they just don't have them near me.
Really? That does surprise me, actually.
Well,
But, you know, he goes to the lumber yard, so he
goes
doesn't
to the
really need the likes of
lumber yard, yeah,
Walmart at the end of the day.
Not too much.
All right, so this is a story that I think caught everyone's eye yesterday, and that's that the WHO, World Health Organization, is calling Mpox outbreak in Africa a global health emergency. So we wanted to dig a little bit on that. Janice Q is a healthcare reporter for Bloomberg News, and she joins us now from Johannesburg. Janice, let's just start really basic. What is Mpox?
So Mpox is a less contagious cousin of the smallpox vaccine. It's generally milder symptoms, although it can be lethal. While about 30% of smallpox patients died, the fatality rate for Mpox has been 3 to 6%. It's from a virus that is actually called the monkeypox virus, which is really a misnomer. When it was discovered in 1958, it was spreading in monkeys that were kept there for research in Copenhagen, and so that was how the virus got its name. But the World Health Organization changed the name of the disease to Mpox in 2022 to curb what it called racist and stigmatizing language surrounding the infection.
Give us a sense of the spread of this. Where is it? Where is it spreading to? How concerned is the World Health Organization about a greater, I guess, a global spread?
So it's this particular strain and this outbreak. So this is a mutated, fast-spreading strain that has come out of the DRC, the Democratic Republic of Congo in Central Africa. Africa is the only continent in the world that Mpox is endemic. And the last time we had a global health emergency around Mpox, that was in 2022, and it was actually declared not over, but the alert level, which is the highest alert level that the WHO can call, that was ended in 2023, so about a year ago. And that was a different strain, which was a less deadly strain. So this strain is more closely related to the endemic strain found in parts of Africa. It's spreading from the central parts of Africa east at this stage. We've seen it in countries as far east as Kenya. I would like to say that the global risk is low, but the WHO Director General did say yesterday at their press briefing where they announced this FAQ, or this global health emergency, that it is very worrying, that it's spreading fast, that we've already seen it spreading east. And as we saw with other pandemics like COVID, only really need a few people to be jumping onto an airplane, and these things can spread quite quickly.
What actions are being taken to contain this?
It's an incredibly tricky area to work in. The DRC's a big country, and it is it includes areas that are highly forested, and surveillance is not where either the WHO or the Africa CDC would like it to be. And maybe most importantly at this particular point, we still don't really have vaccines on the ground. So back in 2022 and 23, with that global outbreak of Mpox, there were countries, predominantly in the West, who stockpiled the vaccine. And we would like to see, I guess, those vaccines really reaching the ground. The Vaccine Alliance, Gavi, has said that they have vaccines ready to deliver, but they've got to get orders effectively from the governments. One of the problems is that the vaccine is quite expensive. Africa CDC Director General has pegged it at about $100 a dose. And these countries that we're speaking about are certainly less affluent than a lot of the countries that were ordering vaccines back in 22 and 23. So there's going to be some delicate price negotiations in the coming days and weeks, I'd imagine. The agencies like the WHO and Africa CDC are certainly working very hard to coordinate this and to get vaccines on the ground.
All right, Janice.
Vaccines aren't the only measure. There are other measures like antivirals, etc. So there are other things that can be done and are being done to try and contain.
All right, Janice, thank you so much for joining us in that reporting. Janice Q, she's a healthcare reporter for Bloomberg News, joining us live from Johannesburg, South Africa, from our bureau there. We've got a bureau in Johannesburg, about a dozen people, so pretty cool. We get that on the ground reporting. And I was looking on Google Maps for like South Africa and Johannesburg to see where our office was, and no surprise, it's like the most beautiful office, most impressive office in Johannesburg, because that's how we roll at Bloomberg. I was just thinking how ignorant I am of South Africa. And then I said, no, let me step back. How ignorant I am of the entire African continent. I need like a book to just read it cover to cover. That'll make me a little bit less ignorant about the.
I'm sure that those exist.
I'm going to go.
I'm sure John
Google
Tucker's read that.
I'm sure John's read it. There's a YouTube channel.
I'm proud to say my nephew is over there right now for the past 2 years, serving in the Peace Corps. There
you go.
Just outside Dakar.
Very good.
That's so amazing.
And I'm thinking, if I want to go to Johannesburg, how would I get there? Well, I'm looking at FlyGo on the Bloomberg terminal. Newark to Johannesburg. Flight leaves tonight at 8:45 Newark time. Gets into Joburg tomorrow, 5:45 p.m. 15 hours in the air. That's United Airlines 787, nonstop.
I think I'm just more impressed that you've literally done all this work while we were also in a segment, and you were listening to a segment at the same time. I was not expecting that. I was like, we're going to talk about sports betting, and that's not at all what happened.
Whenever we do a story about Africa, I have to Google because I don't know anything. It's weird. Like, I've never traveled there. I've never,
I guess we weren't building out offices when you were building out BI there.
No, it was not. I mean, although Bloomberg, it's been for Bloomberg LP, it's been a big, important market for, as long as I've been here, 14 years, almost 15 years. Big for terminal sales, big for our news organization. Again, we've got about 15 folks in our Johannesburg bureau, so it's been a big focus of the company. I don't know anything about this.
I'm literally looking, I'm like, what is he looking at where he's doing that? Anyway, coming up, we are going to talk about sports betting and meme stock betting. Are they the same? And if you are betting more on sports, are you actually not investing in stocks? Lou Wang has a great piece out on the Bloomberg. We are going to break that down, taking a look at equity markets still on the upside.
your company news headlines on Bloomberg Radio.
And I'm John Tucker, the Bloomberg Newsroom. Look at some of the company news we're following. Square footage in supercenters and supermarkets continues to decrease. The contest for supermarket and grocery shelf space heating up as brands, including more lower-cost offerings from grocery stores themselves, vie for a shrinking number of spots in the aisles. The story from the Journal, grocers trimming both the number of items they stack and the overall physical space. And it really matters. Take, for instance, Clorox last August when it disclosed the cyber attack that prompted the company to take certain systems offline and resort to manually ordering and processing products. They lost shelf space as a result of that breach. After announcing the breach, Clorox's net sales, they actually declined 20%. Meta Platforms has shuttered CrowdTangle. This is the popular social media analyst tool that lets journalists, civic groups, and researchers monitor trending posts on platforms like Facebook and Instagram in real time. The timing of the tool's shutdown, months ahead of the presidential election, is drawing concern from groups that relied on CrowdTangle to track the flow of information on social media, including viral falsehoods. Meta says it's continuing with CrowdTangle's shutdown because the tool has been, in their words, hard to maintain, among other things. Donald Trump wants to sell more high-end condos in the U.S., this time using a famously difficult Florida golf course as the draw. The former president's family business seeking to build residences and retail inside the Trump National Doral Miami Resort. This is according to documents posted on a City of Doral website. The property covers more than 600 acres and features a hotel and 4 golf courses. And that's a look at some of the company news.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Thursday, everyone. Happy Friday to Paul Sweeney. I'm Alex Steele. And alongside Paul Sweeney, this is Bloomberg Intelligence Radio. We are broadcasting to you live from our interactive broker studio right here in Midtown Manhattan. Also catch us up on YouTube as well. Let's get you up to date here with world and national news. And for that, we go to Michael Barr. Michael?
Thank you very much, Alex. Paul, John, today the Biden administration will announce new lower prices for 10 medications used by millions of older Americans after historic direct negotiations between drug companies and Medicare. The new prices are expected to save taxpayers $6 billion and seniors about $1.5 billion in out-of-pocket costs when they go into effect in 2026. Editor-at-large of Public Health for KFF, Dr. Celine Gounder.
KFF polling has consistently shown that giving Medicare the power to negotiate drug prices is popular with a majority of both Democrats and Republicans. And a large majority of people also think that this authority should be extended to private insurance companies beyond just Medicare.
Dr. Gounder spoke to CBS. Israel began talks with international mediators about a proposed pause to the more than 10-month-old war in Gaza in an effort to ease tensions between the Jewish state and Iran. An Israeli delegation arrived in Qatar to meet with its prime minister, Egypt's intelligence chief, and CIA Director William Burns, who is representing the U.S. Authorities have arrested at least one person, maybe more, in connection with Matthew Perry's death. An assistant found the Friends star face down in his hot tub in October. His autopsy found that the amount of ketamine in his blood was in the range used for general anesthesia during surgery. The World Health Organization has declared a global public health emergency over the spread of Mpox cases in Africa. Dr. John Brownstein is at Harvard Medical School.
The Democratic Republic of Congo, an escalation of cases. Over 15,000 cases, over 500 deaths. And we've seen a rapid spread, not just in that country, but in neighboring countries.
Dr. Brownstein spoke to ABC. Health officials say the virus, formerly known as monkeypox, is spread through close contact with an infected person, animal, or material. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Alex, Paul, John.
All right. Thank you so much, Michael Barr. Appreciate that. So Lou Wang wrote a great piece, and the title is Gamblers Are Dumping Stocks to bet on sports. And this is according to a new study. It's laid out in a working paper that was titled Gambling Away Stability, Sports Betting's Impact on Vulnerable Households. And it claims to find evidence that for every dollar spent on the recreational activity, now legalized in most states since 2018, net investments in stocks and other financial instruments dropped by just over $2.
I mean, I guess it doesn't surprise me because you think about a lot of the retail trading recently, particularly during the pandemic, it felt like gambling with the meme stocks, for example. That felt like just people sitting in their basements. I got nothing to do. I'm on lockdown. Maybe I can't go to the casinos or I can't go to the racetrack or something like that. So I'll start just kind of trading these stocks and sending them to wild gyrations. But now that we're back out doing our thing, sports betting has become, it's right on your phone. It is so easy. It is now part of the mainstream. Professional leagues, most notably the NFL, wouldn't get within 100 miles of anything related to gambling. Now they fully embraced it. Even the Walt Disney Company with Jones ESPN fully embraced gambling. So it has just become mainstream. Now you've got in Las Vegas, every major franchise either there or has plans to move to Las Vegas. So that barrier, which was really strong, you think about the Black Sox back from 1919, that's almost completely broken down now.
What's interesting, though, is that if we look outside of meme stocks, for example, retail traders are still betting big on options trading. Like they make up nearly 19% of the total market activity. This is according to JP Morgan. So is looking at meme stocks versus sports betting the right kind of analogy, or is it just sort of spreading the wealth, so to speak, at the end of the day?
Yep.
I've not done the sports gambling. I've done the gambling, but not the sports gambling.
I'm not into it.
I know that's very surprising for those of you who follow this show closely with my sports knowledge, for sure. All right, Paul's headed out. He's going on the beach. I'll be here tomorrow for you. This wraps up Bloomberg Intelligence. Balance of Power with Joe Matthew up next.
From the world of politics to the world of business, this is Balance of Power. Washington, D.C.
Joe Biden passes the baton. Welcome to the fastest show in politics as the president appears on stage with Kamala Harris for the first time since Biden dropped out of the presidential race. It's a short time from now. We're going to talk about another key moment here in the campaign with Adam Hodge from Bully Pulpit by way of the Biden White House. Latest readings on the economy hose down talk of a recession. Today we'll get into it with Anna Wong from Bloomberg Economics. And we'll assemble our panel for more. Rick Davis and Caitlin Legacki are with us for the hour, and it's all after a look at Wall Street. We start there right now, as always, with Amy Morris today in for Charlie Pellet. Hi, Amy.
Hi, Joe. Stocks did climb and bonds tumbled as retail sales data underscored the strength of the U.S. economy. U.S. retail sales data topped Wall Street forecast. Bloomberg's Vinny Del Giudice explains.
Retail sales advanced 1% in July, the most since early 2023. Car sales bounced back after a cyber attack. Electronics and appliances posted solid gains. E-commerce rose at a more modest clip, potentially reflecting discounting as the data are tallied in dollars, not by volume. We're talking Amazon Prime Day and promotions at Walmart and Target. Just the same, Bloomberg Economics says consumers are spending at a slower pace than years past. Vinny Del Giudice, Bloomberg Radio.
Thank you, Vinny. Ahead of retail sales, we got retail earnings from Walmart. The world's biggest retailer raised its profit outlook for the full year as it expects to reel in even more deal hunters. Greg Mellick is with Evercore ICI.
Well, I think Walmart's been gaining traffic amongst all consumers really now for a good 8 quarters. And I think what you're seeing is that broadening out, that people are going to Walmart not just to save money on food, but they're going there to find where they need things. They can get some extra and really great value versus what else is out there in the market.
And we check markets for you all day long at Bloomberg. S&P 500 up more than 1%, now at 1.3%. NASDAQ up 2%. The Dow up 1.1%. The 10-year Treasury yield at 3.92%, and the 2-year yield at 4.09%. And that is a Bloomberg Business Flash. Now back to Balance of Power with Joe Matthew.
All right, Amy Morris, thank you. Welcome to the Thursday edition of Balance of Power here on Bloomberg Radio, on the satellite radio, and on YouTube, where you can find us right now. Search Bloomberg Business News Live. You'll see our live stream there, waiting for you with smiles on another important data day. And as you've been with us for the course of this week, we've been connecting the dots between the economic data and, of course, the politics we talk about every day here, with some very important developments in the economy that are music to the ears of the Biden administration. And interesting, this is the day that Joe Biden will appear on stage with Kamala Harris for the first time since he dropped out of the race. Speaking of connecting the dots here, or passing the baton, we'll use all the cliches coming up with Adam Hodge from Bully Pulpit, but we want to get into the numbers first here. Retail sales, jobless claims, and Anna Wong at the rescue, chief economist at Bloomberg Economics. It's good to see you, Anna. A lot more references to Goldilocks here. This is not a recession, it's starting to feel like, but we're also seeing prices cool. So is this the moment we've all been waiting for?
I don't know what the moment everybody's waiting for, but I think it's quite important to unpack the data we've seen today. As you said, connected dots. I think the picture is not as rosy as it seems, because if you look at the retail sales surprise, half of it is driven by groceries. The other half due to cars, rebound from the cyber attacks the month before. But when you think about groceries and you connect that to the dot of the Walmart earnings calls this morning, what it shows is that, well, in fact, Walmart has a big grocery share in the whole entire U.S. economy. So it's offering all these discounts, drawing these high-income people. It's actually a cannibalizing growth of all the other upper-end shops. So what you're seeing today is just a small segment of the economy that's doing well. But in fact, the large share segment is that today we also see industrial production contracting, capacity utilization going down, which means that the new orders is not firms are not producing. If the economy is really so robust, then it begs the questions: why is production slowing? Why is the surveys today from Philly Fed and also Empire showing that firms are cutting people? And a sharp layoff, reduction of work hours. So I think right now we are in about a month or two, we're going to get a lot more bearish data.
This is interesting. So you're not buying Goldilocks.
Not at all.
This is an economic slowdown.
Not at all. Yes.
Is what this is.
Yes.
But you get a dose of data like this. It's the trade down is what you're referring to, right? Walmart's going nuts because everybody wants to save money, go to Walmart, but all the mid to higher end retailers are empty.
Yeah, like Macy's, like, right? Yeah.
So where are we in the economic cycle when you see that happen?
So, going back to jobless claims actually lag layoff announcements by about 3 months. But if you track actual layoff announcement, it actually spiked in August, which means that it will start to, I think by the time it's October, we're going to be seeing jobless claims that's higher than it is now, unemployment rate at 4.5%. And I think it's just that the economy is not showing up in these economic releases yet.
Fascinating. What does this mean for Jackson Hole next week? Does this do anything to change the Fed's view? Does it reinforce the idea of an intermeeting cut, or we're not talking about that?
Yeah, I think the key data release that will determine whether September will see a 25 or 50 basis point cut is the jobs report that we'll get in the first week of September. And we are still expecting that we'll see a 4.4% unemployment rate in that report. But unfortunately, Powell will not have that data point in next Friday's Jackson Hole. So he'll just have to signal that we are ready to cut, but he cannot provide much guidance on what size would the cut be.
25 basis points, though, in your view, at the meeting in September?
I think 50 basis points, given
50?
Given that we do see unemployment rate rising briskly.
Wow. I wonder how the market reacts to that. A lot of folks are worried that would spook investors. But what's needed is what's needed. That would also suggest that maybe the Fed should have cut in July.
They should have, definitely.
Anna, it's great to have you, as always. Anna Wong is the chief U.S. economist at Bloomberg Economics with us today. You can read about the retail sales report, jobless claims, put them together on the terminal and online here. Anna Wong's analysis is important as we consider what we're going to hear a little bit later on today from Joe Biden and Kamala Harris. They're coming together in Prince George's County, Maryland, which is just outside, just across the Potomac from Washington, D.C. And we're going to see this Bidenomics turning into Kamalanomics before our eyes here. Important, the White House announcing this morning that Medicare is expected to save $6 billion from the first round of price negotiations. You're going to hear Joe Biden talk about this. It involves 10 widely used drugs. Seniors, they say, saving $1.5 billion out of pocket. This is on brand if you're talking about lowering prices. That's the point of this today, the progress that's been made so far. Tomorrow, Kamala Harris in North Carolina is going to roll out her whole economic package here and presumably give us a sense of where we go from here. And will there be differences in the Joe Biden versus Kamala Harris approach? We don't know, and that's why we're going to be listening. But we do want to stop down for an important moment in political history. If you listen to or watch this program, this is obviously important to you, and it certainly is to Adam Hodge. We wanted to bring in Adam based on his experience as an advisor to Joe Biden, a member of this administration before he became managing director at Bully Pulpit International, spokesman, by the way, for the National Security Council. That was his area of expertise in the White House. And Adam, it's great to see you today.
Good to see you, man.
You've been talking to us through this whole process of Joe Biden coming to grips with what's happening, his decision to drop out. And now today, it's been a while now. It's been a couple of weeks, and today he'll be actually on a stage with Kamala Harris. What's this going to feel like?
I think it'll feel like a really great opportunity for him to pass the baton physically, right? And all leading into what should be a very raucous and warm welcome for him at the convention in Chicago next week. There's an opportunity for him to really help her in some of the areas where he was particularly strong on the campaign trail. I mean, I think he went to Scranton more times as president than just about any president in history, right? So I think you'll continue to see him almost like be the permission structure for some of the voters who were following and who believed and who loved Joe Biden in some of those middle-class areas of the country, to him passing the torch and say, you can trust Kamala Harris to fight for you just like you trusted me. That is, I think, going to be the overarching theme of his effort on her behalf over the next few weeks of the campaign.
Interesting. How difficult is this going to be for him at the same time? He's addressed the American people from the Oval Office. He's done a couple interviews. But to stand up there and remember what that was like, to soak this up, this is going to be one of the last political rallies he's ever involved in.
Well, I mean, we've got 85 whatever days until Election Day. He's got plenty more rallies to go. I think the convention will be, again, one of those moments where he will feel the love from the party. I think it's an important moment for him, though, and for her to talk about their success that they've had trying to fight inflation and lowering costs, right? I mean, and their real economic record that they can both own together.
Well, and I ask you that knowing that he may well make appearances on the trail. But it's not going to be about him anymore.
No, but he said when he was running, he was a transformational candidate. He was going to pass the baton. It may have not happened exactly on the timeline that he envisioned. I think clearly there's been reporting that he thinks he still could win. But I think it's an opportunity for him to also help hand over the economic record. So 16 million jobs. We saw this week 300,000 clean energy jobs. And you've seen actually what I found fascinating. Her favorability on the economy has actually ticked up over the last few weeks. She's pulled even or close to even with Trump in a lot of the economic, who they trust on the economy. That's real momentum that I think captures some of this passing of the torch. Now it's on her to take it and take the baton and run through the
I saw that
day.
FT poll, which I think you're referring to, which I know was very good news for the campaign. It argues with some other polls that would suggest this is still Donald Trump's issue to lose. He had an opportunity to talk about it yesterday. Didn't say a lot about his economic plan. We got to Hannibal Lecter and all the rest of this stuff. What kind of an opportunity does that present for Kamala Harris? And I ask you that knowing there's reporting today she's going to call on Congress, according to Politico, to pass a federal ban on price gouging tomorrow. How specific does she need to be about her plans to draw a contrast to Donald Trump?
I mean, to go back to your point yesterday, could not have been a more stark contrast for Trump. I mean, you got CPI coming down below 3% for the first time in almost 3 years. And then he's talking about raising tariffs to 20%, which would, but the Peterson Institute, nonpartisan, said would raise costs about $1,700 for hardworking families. The pivot to tomorrow, she's got an opportunity to lay out a contrast. Like, she is coming out with an idea, a proposal that she thinks will lower costs in the grocery store. Trump didn't say, he talked a lot about grocery prices yesterday, but there wasn't really any detail about what he'd do about it. The price gouging plan is certainly an opportunity to pick up on some of the key messages they've talked about lowering prices, whether it's Inflation Reduction Act and lowering costs for insulin, prescription drug out-of-pocket costs. Those are all pieces of their agenda. And it is, I think, also speaks to a more empowered FTC in a Harris administration. There's been a lot of questions about what that...
More than a Biden administration?
Well, I mean, I think one of the things they signaled was that the FTC would take a look at some of the mergers in the grocery space. You already saw the Biden administration specific to that industry.
After we went through the Kroger affair and all the rest.
Right, and that FTC suit is still ongoing, right? So I think that is something that investors and companies should be paying attention to. She's signaling her intention as this is one area where people actually feel it. And I think that is where it makes good politics, makes good policy for her in the campaign. They feel like this is a chance for them to drive an affirmative agenda and look at a forward-looking agenda as opposed to Trump, who wants to take us back.
Your specialty is national security. You were a national security advisor, of course, in the White House. And this president has been associated with foreign policy for many years in his career. Kamala Harris doesn't have the experience that Joe Biden had coming into the White House. But there are a lot of questions about what difference there might be in their approach to foreign policy. I wonder what you think about that, knowing that there are going to be a couple of dozen of uncommitted delegates in Chicago. Rarely have 30 people made so much noise, who are still upset about Israel policy. These are pro-Palestinian protesters. What should they know about Kamala Harris, if anything, that's different than Joe Biden?
The important thing to remember is she actually comes into office with one of the strongest foreign policy records of experience than any other president since Joe Biden. Right? I mean, just at being the vice president, she traveled the world.